Okay, good morning and welcome to the 14th Committee in 2013 of the Finance Committee of the Scottish Parliament. Can I please remind everyone to turn off their mobile phones, tablets, electronic devices, etc. The first item on our agenda today is to decide whether or not to take item 4 in private. Are members agreed with that? Yes. Members have indicated their agreement. The second item on our agenda is to take evidence from Mr Edward Troop, who is the Tax Assurance Commissioner and Second Permanent Secretary of HMRC, and Sarah Walker, the Deputy Director and Head of Devolution Team at HMRC. Can I welcome the witnesses to committee and also ask them to make a brief opening statement.
Good morning, and thank you for inviting us here. You've already introduced us. Edward Troop, Second Permanent Secretary at HMRC. I'm also the Additional Accounting Officer for Scotland and for matters relating to the Scottish rate of income tax. Sarah is responsible for the devolution team in HMRC and for the detailed work involved in the Scottish rate of income tax. She sits on the programme board and the project board who are taking forward the detailed arrangements. My responsibilities are to make sure that the Scottish rate of income tax is implemented effectively, and as Commissioner I'm answerable to the UK Parliament for the collection and management of taxes generally, but that obviously includes income tax, of which the Scottish rate of income tax is part, so I am as answerable for the proper collection of the Scottish rate of income tax as I am for the balance of income tax across Scotland and the rest of the UK. I think you're aware from the annual report, which has been published on the 25th of April, of the progress that we've been making, and I'm happy to go through that and give you a bit of the details of what we've been doing and what we propose to do and expect to do over the period up to implementation. I think what I just say sort of overarching is that we've had extremely good working relationships with the Scottish Government, and that the relationship, which is based, as you will have seen from the Memorandum of Understanding on openness and transparency, is working in that way, in an open and transparent way. And I'm happy to say that so far we have not encountered and we do not foresee any major problems in the run-up to implementation.
Thank you very much, and what I'll do is I'll ask you some opening questions, and then I'll obviously open up the session to colleagues on the rest of the committee, but thanks very much for that brief opening
Take my jacket off.
Of course, actually, funny enough, I was thinking something similar. It's really hot in here. It's not usually like that, but it is actually quite
not used to encountering heat north of the border.
People should please feel free to make yourself comfortable. Where was I? Indeed, right, I'm going to ask questions, I think, primarily on the Memorandum of Understanding. And of course, in the introduction, it makes clear that SRIT is not a devolved tax, but Scottish ministers will be responsible for the tax, but not for any other element of the tax, nor for its administration. And it goes on to say that the document has been agreed by the Scottish and UK governments, but has no formal legal force. Now, some of the things that I'm going to ask you have been asked of other people, and one or two maybe kind of political or quasi-political, so don't feel that if that is the case you feel uncomfortable answering them. But you may be able to help us with one or two things. One is about the dates and timing. For example, the document came into effect following royal assent to the 2012 Act, and it will be reviewed at the request of either party at the end of the 2 or 3 year transitional period referred to in the command paper, so that would be April 2018 or 2019. But is there any further detail as to which of these years it's actually going to be?
Not that I'm aware of, but Sarah may be able to answer that.
Do you mean the end of the transitional? It
talks about the transitional period being 2 or 3 years, but no one seems to be able to tell us whether a decision has been made as to whether it will be 2 years or 3 years. Is that going to be a kind of suck it and see type of process, or is a decision going to be made before the implementation of this tax?
I think that's a matter for the Treasury, because it's really about how the block grant works. I think it's deliberately been left open because it will depend on experience of how predictable the revenues are from the Scottish rate, which will then, I think, drive the decisions as to at what point that sort of safety net of the block grant should be withdrawn. But that's very much a matter for the Treasury.
And the transitional period obviously is, as Sarah says, a safety net to ensure that actually things work as expected and there are no unexpected glitches in the difference between the forecast and the received revenues when the system's actually running.
And what would determine the extent of the transition period?
As Sarah says, I mean, it's going to be a political matter once we've seen what the actual numbers turn out like for the first and second years of the operation of the Scottish rate.
Okay. Now, in the memorandum, it goes on about the HMRC will invoice Scottish Government for agreed items of expenditure, and Scottish Government will make payments for those. And it talks about being invoiced for agreed terms. Is there anything that has not been agreed, and what would be the mechanism if people were invoiced where there was no agreement?
Amounts do have to be agreed before they're invoiced. If it's not possible to reach agreement, there are various mechanisms in the Memorandum of Understanding, and as you've seen, there's a particular mechanism relating to IT costs, but ultimately any disagreements will be escalated up and could ultimately come to the Joint Exchequer Committee if they couldn't be agreed.
Now, I understand that indeed there is a dispute resolution, and it talks about that in paragraph 4.6. If agreement is not reached on some of these issues, it will be brought by the Joint Exchequer Committee for discussion and agreement by ministers, whose joint decision will be final. Our own budget advisor looked at this matter and said that whether such a collegiate approach can be guaranteed, or will ultimately the UK government take this decision?
Well, I mean, clearly, you can never guarantee. An agreement to agree is never completely enforceable. We have worked in, as I've said, in a spirit of openness and transparency, and so far we have managed to agree. I have every expectation that we will continue to do so. But you know, it's not possible to say with absolute certainty that there won't be some matter which does get escalated to the Joint Exchequer Committee, and it's well above my pay grade to say what would happen if it went to the JEC and couldn't be agreed.
Okay, but ultimately the UK government has the majority on that committee, and the ultimate
that I believe is the case.
Okay. Now, I just want to talk about the self-assessment system for a while. There obviously is concern that there's a potential for the self-employed who mainly pay under that system to change their incorporation status in response to differentials between Scottish and the rest of the UK rates of income tax. And clearly all sides wish to ensure that that there is no tax avoidance through that. Can you just talk us through some of the measures that are being taken to ensure that doesn't actually happen?
Well, can I step back a bit? Because you're absolutely right that the tax system contains a number of incentives, and even before the introduction of the Scottish rate, there are incentives and differentials encouraging individuals to incorporate rather than to be employed or self-employed. And you know, the UK government's been aware for some time that, you know, there is a considerable trend and there are a significant number of businesses which have been established to take the advantages, the tax advantages of incorporation, as well as, of course, the commercial advantages. That incentive exists in Scotland at the moment for an individual subject to UK income tax in Scotland, looking at the choice of whether to operate as a self-employed individual or to operate through a company. And I've no doubt that residents of Scotland have already made choices and incorporated in response to that incentive. Were the Scottish rate to vary from 10%, so that let's say the aggregate rate of income tax was 22 or 18 rather than 20 at the moment, it would change the incentives, although fairly marginally for individuals. And that might have some impact on the numbers of individuals who choose or don't choose to incorporate. But I think, you know, looking at this, and it is a very difficult matter for us to assess exactly how much tax-motivated incorporation there is as compared to sort of genuinely commercially motivated incorporation. This is something that we are aware of. There are quite a few statutory measures which seek to target the most abusive forms of tax-motivated incorporation, but by and large, the UK government's approach has been to accept that an individual or group of individuals is free to make commercial choices and to take tax into account when they do so. So there is nothing specific which prevents a self-employed individual from choosing incorporation if that is the right thing to do. As I say, there may be a marginally different incentive to do so if the Scottish rate were to vary from 10%, but I don't envisage the need for any additional measures to counter that incentive, nor would I see any significant differential impact on the tax yield as a result, although there might be some very small marginal effect one way or the other.
Does HMRC have any measurements as to how, I realise these things are guesstimates probably as much as estimates on what a 1 penny, 2 penny, 3 penny difference would actually make, either up or down in taxation? Is there any, either bringing people into Scotland or the opposite in terms of tax purposes?
Well, I'm not sure whether you're still asking the question about incorporation, and I suspect somewhere in the organisation we do have some views as to how the differential incentive would work, or whether you're asking the question about location decisions, because clearly once the rate starts, if the rate does start changing from 10%, then
I'm talking more about incorporation, because I think the ability to up sticks and move because of a 1 or 2% income tax, I think is very unlikely unless you live a couple of miles from the border, I would imagine.
There is going to be some differential incentive, but as I say, it's likely to be quite small. I don't have any figures or calculations, and I don't think we've done any assessments either for the UK or for Scotland specifically on what the differential incentive would be. But it's something which is perfectly possible that we may have something on, and I'm happy to go back and see certainly what we can say about the position as the UK as a whole, from which it may well be quite easy to extrapolate what the impact would be on Scotland.
Yes, because I mean, obviously, if the Scottish Government is going to set a Scottish rate of income tax, it would be useful to actually have information, if any information is available, on what the impact would be in such circumstances.
I think what I would say about that is that clearly, if you're going to set an increased rate of tax from 10%, you will want to forecast the increased revenues you get. Mm-hmm. The incorporation effect will be part of that forecasting assumption. I would hazard a guess and say actually it will be a rather small amount. That actually, when you're looking, what are you going to raise from additional 1 or 2 or 3p, the amount that you would forecast from that, or your equivalent to the OBR, whoever it is would forecast, would, I think, be very marginally affected by the differential in incorporation decision. And similarly, if you were to reduce the rate and that was to cost you, I wouldn't have thought you'd get much savings from the reduced incentive to incorporate. So I doubt that you could disaggregate it from the wider forecasting work that would need to be done for any change in the rate.
Okay, thank you for that. That's very helpful. Now, if the tax codes have not been determined by the Scottish Parliament by the end of November, HMRC will have to work on an agreed assumption for the issuance of tax codes. I'm just wondering how that assumption would be set.
I mean, this is not a new issue. I mean, this is a practical issue which comes out of the operation of PAYE, where we need to issue codings from the end of the year onwards to individuals to allow employers to go into the next tax year able to make the right deductions from employees' pay to reflect the tax rates and the tax codes for the year. And it has always been the case that if we don't, that we have to do that in November or December. The assumption has been, if in the UK, that if the Chancellor of the Exchequer has not set the rates and codes for the year ahead, we simply roll forward whatever assumption there was from the previous year. And if following November an announcement is made, obviously typically in the budget, to change that, then we have to issue revised codes, which we do, and the PAYE system then corrects the employees' deductions during the course of the year. So, in a sense, we would be quite happy to be guided by whatever the Scottish Parliament said to us, and if at the end of November they've said nothing, we will, I imagine, and Sarah, in one of our previous roles, has been the expert leader on this, simply roll forward. But even if there wasn't a formal decision, I imagine if we were to be told the expectation is that the rate will be this, and you were prepared to say that in public, because obviously it would become public once we put it in the codes, then we could put a different assumption. It's not really what the assumption is, we just need to put something in the codes at that point, conscious that it will have to change if that's not the final answer.
I mean, I understood that would be the case, but I thought it's important to get clarification on some of these.
It's not
matters.
that we are telling you anything, we're just having to run the system, you know, with whatever information we have at that time.
Indeed, I don't want to make assumptions about the assumptions. So I haven't assumed to do so.
I will not presume to challenge you on that.
Indeed. I'll just switch a wee bit to the disapplication of stamp duty land tax in Scotland. The project team is focused on an analysis of how existing HMRC systems will be affected by the disapplication of the tax in Scotland and the identification of stakeholders affected by the change. And I'm just wondering what progress has been made in that regard.
I think I'll have to hand over to Sarah on that one.
Thank you. Yes, we are basically, the work we need to do is to look at what changes we would have to make in order to operate the tax after the change. I think one obvious thing is we want to change our systems so that they will reject any attempt to pay stamp duty on a transaction in Scotland. So we'll sort of check a postcode, and if somebody's trying to pay stamp duty on that, we will say, no, you've got to go and pay the LBTT instead. So it's those kinds of changes. So what we need to do, as for all our taxes, is first to really check through the existing systems to make sure which bits of them might be affected. Obviously things like forms and guidance will be affected as well. We have to identify the bits that need changing. We then need to, particularly in the area of the IT system, there's a formal process to go through to get estimates for the change to ensure that our supplier can make the change in time and to make the plans in a fairly formal way. We're just starting what we call the viability stage, which is where we go into discussions with our IT supplier to determine exactly the changes that need to be made to the systems and what those get a good estimate of what those are going to cost. But at the same time, we're looking at our operational systems, at our forms and guidance, and we will be consulting outside, particularly the legal profession, obviously, because they are very much involved in the transactions. Registers of Scotland, we're working closely with the Scottish Government, Registers of Scotland and Revenue Scotland as they're being set up, to make sure that we are coordinating our changes with the introduction of the new land and buildings transaction tax, so that we have the communications with customers being very coherent and consistent, and make sure that there's a single message that's going to people.
Okay. Now the memorandum of understanding goes into great detail about costs and about how they'll be allocated and etc. etc. But understand that in November 2010 it was estimated that the cost of setting up the new taxation systems following the 2012 Act could be between 40 and 45 million pounds. From previous witnesses, it seems to have been that was a kind of ballpark estimate. I'm just wondering what the most up-to-date estimates are of what the likely costs are of that process.
Yes, I mean, I wouldn't like to use the word ballpark. I mean, they were very provisional estimates because obviously at that stage we didn't know exactly what work would be involved. We haven't done and been able to do yet a revised figure. I hope that that number will prove to be on the high side, but I'm not going to say that it is anything other than our current best estimate. So the figure of 40 to 45 still stands. It was developed by the same processes that we cost all internal changes in HMRC, using the impact assessors who go through the systems people, communications and other changes needed. About a quarter of it, about 10 million, we estimate to be IT costs, and the rest is the operational work that's needed to communicate with and deal with a significant number of taxpayers. But I'm afraid we don't at the moment have a better figure than that.
Yes, it's just that last year, you know, when committee HMRC said that we hope that expenditure will be significantly less than £45 million, just to see if that, if indeed
I certainly
was going
hope
to
it,
be,
I certainly hope it will be.
if there was any indication, any hints, any kind of nudges, winks, nods.
No, I'm not holding anything back.
Yes.
This is a relationship of openness and transparency. As soon as we feel we've got a better figure, which I hope will be lower, you know, we will share it with you.
There's no indication it will be higher, though, is there?
There's definitely no indication that will be higher.
Okay,
But
thank
as
you
I
very
say,
much.
I hope that it will be lower, and that's not a promise. It is, but it's a hope. Perhaps, you know, hopefully it will move towards an expectation soon.
Okay.
But we'll see.
Well, with that teaser, we shall open up the session to the rest of the committee, and the first person to ask questions will be Jamie.
Thank you, Convener. I wonder if I could just clarify something. Mr. Can you confirm that HMRC will continue to collect stamp duty land tax right up until the switchover to LBTT? Okay. In a paper you provided the committee, you set out that the effective date of a transaction for SDLT purposes is normally the date of settlement, completion of the contract, but maybe earlier if substantial performance occurs. What happens in the circumstances where the completion date is under the regime of LBTT, but there is an assessment that substantial performance has taken place before the switchover?
Sarah may or may not be able to answer it. Clearly, the intention is that only one tax charge should arise under for any particular transaction. We do, as you allude to, have a number of specific rules within SDLT, basically designed to prevent people from deferring SDLT by not going to formal completion, by doing everything other than doing the final document, by saying that's the point when you substantially perform the contract that you have to pay SDLT. And that is something which we have applied. Obviously, SDLT rates have changed in the past, and at those occasions, in a sense, it's a bit like moving from one tax to another. We've had to make sure we know which side of the line the tax charge arises to get the correct rate. Effectively, the UK rate is being reduced to 0 for Scotland after the implementation date. It is, I think, given that we've got an existing set of SDLT rules, for the LBTT rules to make sure that actually they don't impose a charge when there is already a UK charge, because the UK charge will continue up until the termination date. If there is an overlap of the rules, then while I wouldn't rule out the possibility that the UK Parliament might be willing to change its rules to exclude the UK charge, I suspect they will more likely to look to you to make sure the LBTT doesn't impose a charge where a UK charge is already applied. But there are clearly some quite tricky and technical issues of stamp duty, land tax law to be looked at here. And I don't know if Sarah, you've looked at any of these.
No, I don't think I don't think I want to go into the details of stamp duty law, because I really am not an expert. I think I would just draw your attention to the note that you're referring to, which says that there are going to have to be transitional rules for some specific cases. We're working very closely with Revenue Scotland and with the Scottish Government to make sure that there's clear guidance and clear rules to make sure that there aren't any double tax charges.
I mean, that answer's helpful insofar as, I mean, clearly no one, I think, around the table is wanting to suggest that any individual or any entity should be taxed twice for the same transaction. But I suppose the question is, who would be determining whether or not there had been, in their opinion, substantial performance?
Well, given that that's a matter of UK tax law at the moment, that is an operational matter for HMRC, interpreting the law, applying it to the facts to determine whether there's been substantial performance, and that's something we do in cases where there are attempts to defer a charge by substantially performing at the moment, which our stamp duty, land tax experts, will apply in particular cases.
Is there the potential, though, then for HMRC to seek payment after perhaps someone has settled an LBTT bill? I'm
trying to think about the circumstances, and again, I think you're asking a quite detailed question about the ability to reopen transactions under SDLT. If there were circumstances in which an SDLT assessment had or hadn't been made, and later on we discover that was done on incorrect facts or an incorrect application of the law, then the SDLT provisions, and I'm sorry, I'm not familiar with them, will, I'm sure, give us the right to go back for a certain period of time to reopen. Now, what would happen if by then you'd already had an LBTT assessment? I'm not sure. And I think Sarah's referred to the need to talk through these transitional arrangements with Revenue Scotland. This is perhaps one of the issues which they need to talk through. But I do see, as with everything, this is something where, the open relationship with Revenue Scotland, both about the establishment of the taxes, but also, when we get into operation and working these taxes forward, we'll provide for some way of sorting these things out between us. And in a sense, the relationship is no different. Indeed, it's different, and then it's rather closer than we have with other jurisdictions where there is some conflict of tax laws, and we need to sit down with the other jurisdiction and work out, which rules prevail or whatever the position is. And I would expect in practice that we will need to provide for that in particular cases, whether of LBTT or landfill tax.
Would the HMRC be able to provide this committee with figures that demonstrate the circumstances that we set out where in one tax year there's been an assessment under SDLT rules that substantial performance took place in previous years and they've subsequently sought a payment?
I don't think I can commit to that, because it sounds rather as if I'm going to have to go back and ask somebody to trawl through the several million SDLT transactions to pick out ones that you described.
It's not something that's readily recorded now?
Well, I can certainly, what I'm happy to say is I will, inquire whether we do have that, but I wouldn't get your hopes too high that we do. It doesn't sound like management information which we would routinely keep as part of our SDLT management, but I'm happy to go back and ask that question. What I don't want to do is to undertake that we will provide that information if we haven't got it already, because it sounds like rather a lot of work to do so.
Okay, I appreciate. I think it is important, though. We would, certainly I and I'm sure other members of the committee would want to be clear that the figures are fairly static or fairly steady, and there's not going to be some dramatic increase in claim in the transitional arrangements.
I think it's very unlikely, because the substantial performance rules which you referred to are ones which, as far as I recall, and I haven't looked at these for some time, are not ones actually which are used very much. They are there as an anti-avoidance mechanism. They're effectively saying, don't bother putting off your completion to try and save stamp duty, because if you've done everything else, you're still going to have to pay it. And they're there to make sure that actually people do complete the transactions, and therefore we don't have to invoke the rules. So I would hazard a guess, but I'm pretty sure I will be right, that there are very few applications to those rules, because they're there to deter rather than to operate.
Okay, that's helpful. Just want to explore the costs associated with the switch over in this area. I'm acutely aware they're significantly less than those that have been cited for the Scottish rate of income tax, but I'm still interested in them none the less. I think HMRC have provided indicative figures of around £500,000 for the change in this area. As I say, significantly less than what has been quoted for the Scottish rate of income tax, but I see that these primarily seem to relate to switching off your systems in terms of SDLT. That sounds very much like a term that we bandy around, but what does it actually mean?
Well, I think it's very much what Sarah's described. It's not £500,000 for going to, take a light bulb out, as it were, but it's very much as Sarah's described. So I don't know, in a sense, without repeating what you've already covered, Sarah, whether there's anything you wanted to add about the switch off.
Yeah, I think it is pretty. But the main thing is this thing about identifying transactions which may come through in future, which will no longer be liable to SDLT. So because it's an automated system, you need to have something built into that system that identifies a Scottish postcode or whatever, and then says, sends out a message that says, don't pay us, pay the Scots.
Okay. I know it's only indicative, but where does the £500,000 come from then?
£500,000 was a very early estimate, again, like the 40 million, if you like, of the IT cost of those changes to our systems, which are not just that rejecting Scottish transactions, but also changing the automatic outputs and the automatic letters and the forms. There will be some costs on top of that 500,000, which are associated with staff costs, which weren't included in that estimate. But we still think that 500,000 is a reasonable ballpark figure for the total cost of the SDLT change.
I mean, I think what I'd add to that is I don't want the committee to feel that in some way we're being cavalier because we're not being able to give firm figures. We gave figures very early on because we thought it was important to do so, and you wanted the figures. As I think you know, Sarah and I appeared before the audit committee in November, and they are, quite rightly and understandably extremely interested in these costs. Both your auditor and the NAO are, going to look very closely. The MOU, as you know, has a whole process which make sure that the costs are agreed and that we provide sufficient evidence to, as we do for all of our costs, and we have to do for the NAO and for our own accounts, to explain what all the costs relate to. So I would expect you and the audit committee to be able to see as and when these costs develop, and as they develop, not sort of sometime later when we suddenly present you with a bill, what we're actually doing. And that will be part of the agreed programme, what IT changes, what staff costs we're incurring, and then the actual costs, when they have been incurred, will be subject to audit in the normal way. So, while this is a ballpark, estimate figure at the moment, you will have a lot more detail of it before it actually has to be settled.
Okay, thank you.
So just to follow on from that, would we get the costings through the annual implementation report, or as they happen?
Sorry.
The costings that we just discussed, would we get them through the annual implementation report, or would we get them as they happen? In other words, when the change is finalised, will we be told as a committee?
Sarah, do you want to pick up?
The actual costs as they're incurred will be invoiced quarterly, and I believe the Scottish Government will make those figures available. The forecasts of the sort of total cost and the future cost we would expect to include in the annual implementation report.
Right.
I mean, as we're now giving a more accurate forecast for the year we're currently in, we will be able to do that year by year, even though obviously the amount of costs will increase as the programme develops.
Okay. Gavin, to be followed by Jean.
Can I just follow up on a couple of cost questions in relation to income tax? I heard your answer about the set-up costs of between 40 and 45 million. At the same time, the last year we were told that the annual running costs were estimated to be 4.2 million each year. I suspect I know the answer to this question, but is that a similar answer to your previous question, where it was your sort of best estimate at the time, and it remains your best estimate?
It was the best estimate, and I won't say it's more accurate than the previous one, but in a sense, once the system's running, we have we've got a better idea of what will be involved, and therefore I won't say I have more confidence in the other figure, but it's less of a ballpark. Although, as I've said, it's not a ballpark; it's a best estimate.
Okay, thank you. And clearly, I suppose the figures so far are very small, but in 12-13, the costs from HMRC to the Scottish Government was £165,000, 141 pence. Estimated costs for the current financial year, I'm told, are going to be 1.5 million. Do those, so while out of the sort of 40 to 45 million, that's quite small amounts, does the amount spent last year and the amount predicted for the next financial year, does that sort of tie up with your original estimates, or are they higher or lower?
I'm not do you want to answer that, Sarah?
Yeah, I think what we've been spending money on in the last year and what we'll be spending money on this year is the planning costs, the programme organisation, all the experts getting together to try and scope out and design the system. The bulk of the 40 to 45 million and the bulk of the stamp duty cost is obviously both the actual IT change, and certainly for the income tax change, it is the operational cost of identifying Scottish taxpayers before April 2016. So there will be a bit bulk of the sort of 40 million is going to be contacting potential Scottish taxpayers, telling them that they're going to be Scottish taxpayers, giving them an opportunity to object, having a helpline to deal with questions, and that's where that big amount of money is going to come. So what we've spent so far is just the people in head office, if you like, who are doing the planning. so that doesn't really relate to the bulk of that operational expenditure, which will probably happen in the year 15-16.
Okay, thank you. Move away from cost now then. I want to come back on to the question about the rate change decision. Clearly you have to do work just after the end of November, and you'll base on either specifically what you're told or assumptions on what you previously understood to be the case. But you made the point that ultimately if Parliament decides in March or in February to change it to end up at 18 or 22, you simply have to issue different notices and so on. In terms of doing that, let's just assume Parliament did decide in March it's going to be 18 or 22 pence. Obviously, I prefer 18, but that doesn't. That's neither here nor there. How big an administrative task is it to implement that change from your side if the decision is, say, March as opposed to November?
But Sarah is the expert on this, but I mean our systems are set up to do this. It is just a matter of churning out coding notices and issuing them and dealing with any follow-up queries, because whenever we send anything out, people pick up the phone, or
sure.
Although we're increasingly trying to get them to use the internet. And it's broadly the cost of that, which does have a cost, because posting letters, printing letters has a cost. But I don't think there's a great deal more, is there, Sarah?
No, I mean, I think, it's not that long ago since the UK tax rates were set in the budget in March. And so we had quite a normal exercise between sort of March and April to issue new tax codes, which then would be, so people would start the tax year with a tax code in March, and then they'd have a new one in April or something after we'd issued new codes. So it's not something we don't do. It is exactly what Edward says. It's issuing, so postage for tax codes. It's communicating with employers. There is obviously a cost for employers as well, because they have to then implement that on their payroll systems. But so yes, it's just what Edward was describing.
Okay, that's helpful. Thank you. Another question. Just I think in your answer you talked about one of the biggest cost is going to be the exercise in identifying Scottish taxpayers and issuing notices to them. I just wonder if there's any update on that piece of work specifically. Have you come across obstacles that you didn't expect to come across? Is it proving slightly easier than you anticipated? Can you just give a sort of brief update on where, because that's obviously one of the key parts of your project, where are you specifically on that?
Well, what we've been doing and will be doing this year is looking at our own data and trying to establish how good that's going to be as an indication of Scottish residents, and hence the degree of accuracy we can expect from using our own data sets. I'm not sure that we've got any results from that work yet, Sarah.
No, I think we're planning to do what we call a scan of our system, so we will actually go across and get out all the addresses and really look at them. It's things like how many people have given us PO box numbers for their tax correspondence, how out of date. We can check our address data against third-party sources, where there are obviously other databases out there that have people's addresses on, to see how much they match. So we're going to be doing that to see as the accuracy of our existing addresses, but we then need to design a process for how we would contact people, how they could come back and dispute a ruling from us as to whether they were within the Scottish rate or not, and what sort of checks we might want to do against external sources to try and check where people were not necessarily giving us the right answer.
But I mean, just sort of expand on that a bit. If once we've done the data scan, we feel that our own data is going to give us a 98%, say, plus accuracy for Scottish residents, then that would lead to one approach to how we capture the other 2%. If that data scan suggests we're only going to capture 90% from internal data sources because it changes addresses, PO box numbers or whatever, then we're going to have to, probably adopt a somewhat different system, because there's a much larger number of Scottish taxpayers who we can't capture immediately. So we do more of a publicity campaign, a more comprehensive correspondence campaign or whatever. So we're doing this process to work out what we need to do for the next stage, and which will, I have to accept, affect the costs of that next stage.
Okay, that's helpful. Thank you.
Jean, to be followed by John.
Thank you. I wanted to ask you a bit about the Office of Budget Responsibility and the forecasting figures that they've supplied to us so far, and in the evidence that we took from them. I mean, essentially it seems that they haven't really had clear Scottish figures. It's new work, if you like, but the forecasting has been fairly erratic in some cases. Would you, in relation to that, there's a foreword here by Michael Moore, which refers to OBR information showing that this could affect great change, and in fact would be quite a high percentage of income tax take for Scotland. Do you know what figures he based that statement on?
No, I don't, but I'd make a number of comments. First of all, I'm afraid I haven't read the evidence that the OBR gave to you, so that there may be material in there which I should refer to. The second thing I would say is that, referring back to the convener's opening comments on the transitional period, that one of the purposes and advantages of the transitional period is it will allow us to calibrate the forecasts which we go into that transitional period with against the actual receipts, and to establish whether the receipts are erratic against forecasts, which obviously is of great concern to you. The third sort of more general point I would make is that, as with any new tax base, where the OBR has to forecast it, the process will involve an extensive dialogue between the OBR and my colleagues in our analysis unit, who are responsible both for analysing the tax receipts we have and also producing our own internal forecasts of tax receipts, and making sure that they have got the necessary data sets and information to allow them to do so. And the process of producing forecasts for any budget involve that extensive dialogue between the HMRC analysts and the OBR, on which the OBR then base their forecasts. So what I would anticipate is that as the information develops, partly when we establish who the Scottish taxpayers are, and we do our own work on those, and we work with our analysis, we will be able at least to develop greater clarity about the degree of uncertainty, but I would hope we'd also be able to reduce the uncertainty on the forecast, work with the OBR and reassure them that actually the forecasts have a degree of confidence in them, and obviously let you know to the extent that we feel there is uncertainty in the forecast, or for the OBR to let you know that. So again, it is all going to be part of the iterative process of developing this tax, and as I say, the 2 or 3 year transitional period is going to provide a safety net and a cushion if we go into that really feeling that we can't reduce the uncertainty below an acceptable level.
So, I mean, the statement then, really, we can't pay any attention to it. It's not founded on any...
Well, sorry, can you just read again what the statement it says? Sorry.
Is this the forecast that the Scottish Government will be able to fund around a third of its expenditure from its own resources?
Yes.
Oh, I think that's, I mean, at that level of around a third, I think that's reasonably,
yes.
We have reasonable confidence in that.
I mean, there are levels of uncertainty and levels of uncertainty. I mean, I don't think there is a huge uncertainty about the level of income tax collection from Scotland and what you would get from the Scottish rate. But all forecasts have a degree of uncertainty in them. So I thought you were implying the OBR had said, and I'm sorry that I say I hadn't read the evidence.
No, I'm just saying
that they were particularly uncertain.
In the evidence that we've had so far, the OBR figures have been difficult to reconcile, even by their own forecasts.
Okay.
Within months, they've changed fairly dramatically.
Right.
So the swing is quite dramatic.
So the OBR sorry, can I understand that the OBR have given different figures at different points in time? Is that what you're saying? Sorry.
Within months, yes.
Okay.
Yes,
but I think that's for the smaller taxes, not for income tax.
I didn't know they'd forecast the Scottish income tax.
No, they haven't forecast the Scottish income tax, but on other...
They do.
Have they?
Yes.
They have, yeah.
They have forecast,
Yes.
Scottish income tax. And this is, I guess that's what I'm saying, that the OBR figures have varied enormously in some of their forecasts. So could we assume that in the opening statement that they're forecasting that these measures would enable the Scottish Government to fund around a third of the spending it controls, which seems dramatically high? I think we've accepted that. Certainly the Cabinet Secretary has suggested that.
So just for information, the OBR between March 2012 and 2013 changed its prediction on UK tax receipts by downgraded by about £18.1 billion, and the share under SRIT for Scotland is about £650 million. So that's really what's being referred to. So it was downgraded from about, memory says, about 5.3, 5.4 billion to about 4.65 billion. So that's really what Jean's referring to.
Okay, well, so I mean, I fear we're straying into territory which needs to go back to the OBR rather than to us, and I just sort of refer back to what I said about our analysts working with the OBR. But I think the conveners pointed out that actually the OBR's forecasts themselves have changed dramatically in the last year, but substantially due to economic factors which are outside most of our control, I'm afraid. So.
Well, I accept that. But we have got a statement in this report that says the work to be carried out by the Office of Budget Responsibility would be critical, and that's in the heading of the block grant adjustment. So I think in the interest of the kind of clarity that you're referring to, that there is quite a lot of a lack of clarity. But just as an example, we had on the landfill tax, the OBR actually showed an increase in income when all of the Scottish Government policies is about reducing landfill. Therefore, we would be expecting to collect less landfill tax and not more.
Yes, I mean, so I've got the current figures. I haven't seen how they've changed, but as I say, I think this is very much a matter for the OBR. We will collect the tax that is due, as we do for all taxes, and if that's not as much because of less landfill or less economic activity, then I'm afraid that's how it falls out.
Okay, thank you.
Michael.
Thanks, convener. I mean, I suppose up until now, this Parliament and even this committee have been quite relaxed about how much tax came in because we only spent it and didn't get it. Whereas now our thinking will be changing slightly. So I was wanting to touch on a few areas about where how HMRC is doing about maximising the tax take. Because, for example, we mentioned self-employed earlier on. I know that in the past you've had quite a push to make sure that people who claimed they were self-employed were really self-employed and not employed. And obviously that then begins to affect us, because if people are paying more tax, we get a share of that more tax. Can you give us an idea? Is that still something you're working on, or?
Can I sort of step back a bit and just say, we are very keen on maximising the tax take. That is our responsibility as a commissioner. I'm charged by Parliament, with the collection and management of the taxes, and that is what we seek to do. Obviously we collect the taxes for the whole of the UK, and again I would remind you that the Scottish rate of income tax is a Scottish rate, and that the income tax is a UK income tax, and therefore my and the Commissioner's responsibilities to collect income tax in Scotland applies as it does to all other taxes. That in the Spending Review 2010, HMRC, although it took a very significant cut in its base spending, had reinvestment of 917 billion, which was in order to improve compliance and collection. We are on target to meet the target of 19 billion of additional compliance returns over the spending review period, and indeed we were given further money in the autumn statement, and we have undertaken to increase the compliance return, i.e. what we get through interventions and action rather than what just comes in through the door, to 22 billion over that period. So we have been working extremely hard across all taxes to improve compliance, to improve voluntary compliance, as well as to chase down those who don't want to comply voluntarily. In terms of the self-employed, a significant part of the tax gap does come from the self-employed. It isn't so much from avoidance as from non-declaration, mistake, and what we call ghosts, i.e. those who just don't appear on the tax system. We have a whole series of programmes and campaigns to chase up various elements and various aspects, driven by intelligence and risk analysis, and those are applied, without fear or favour across the whole of the UK, and therefore in Scotland as in England and Wales and Northern Ireland, and that will continue. I don't have any particular figures for how much of our compliance yield is related to Scotland, but we will continue to apply all of our compliance efforts across all the taxes to maximise returns.
That's reassuring. Is there good communication between, say, the police if they find a rogue trader giving you information that maybe they're not paying tax, or local councils when they're doing licensing work giving you that information?
Increasingly, yes, there is very good communication, and we join up with other enforcement agencies. Increasingly, our compliance work is based on analytics and a tool which we call Connect, which matches up a whole series of databases, which can include databases from local authorities, from DVLA or wherever, with our own databases to identify individuals and businesses where we perceive there as being a greater risk of non-compliance, and we use that in campaigns and in normal risk-based work to follow up. I can't answer a specific question about what we get specifically from the police, but we do share information. We have a whole series of gateways where we share our information and receive information with other agencies, and use those in our compliance work, as well as obviously assisting other law enforcement agencies in their work.
That sounds positive, and you said right at the beginning that you had a very good relationship with the Scottish Government, but I would hope that if there was areas that you were wanting more information, or you were wanting some kind of assistance in all of that, then we would hear about that. The government would hear about that.
Absolutely. If you know of anyone who can help us, then they're good citizens. Please pass on the information they've got.
I'll bear that in mind. In some areas it's black and white with tax, but I know in other areas there's room for negotiation, and one would be when an employer is struggling, has deducted PAYE from employees, and is in danger of going bust. Now, you, I understand, then have a certain amount of latitude as to whether do you keep that business going and hopefully extract the PAYE out of them over time, or do you just say, well, this is not going to get any better, and you would stop it? I'm just seeking a bit of clarification on that, because again, I assume that would affect us, that if a business goes bust and PAYE is not paid, the Scottish take will be less.
Yeah. The liability should always be black and white, although the law is not always clear, and there can be differences of opinion. So the actual amount due should be determined by the amount of salary paid and PAYE due. Where there is scope for discussion with us is not about the amount, but about the terms of payment. And so, in the example you give of a business which has employed people, has generated a PAYE liability that then finds itself in financial circumstances, it is open to that business to approach our debt management people and say, look, I'm having trouble paying. I know how much I owe you, but I'm having trouble paying. What can you do? It is within our discretion, as long as we feel it's in the best interest of the collection and management of taxes, to give a business or an individual time to pay. But we will only do so if we believe, in so doing, will allow that business to trade out of difficulties in order to pay the debt and get back on its feet again. We will not allow time to pay if we think that the business is basically bust and is never going to pay us. In those circumstances, we would enforce. But we would give time to pay if we think that it will help us get the money, and that will generally be where it will help the business recover. Yes, it will, if the tax is not collected, have an impact on income tax receipts overall, and obviously to the extent that those income tax receipts contain an element of the Scottish rate, it will impact on the receipts by the Scottish Government.
Mm-hmm. I'm just thinking of the situation where, maybe a major employer in Scotland, and we've had a few over the recent years, you know, is struggling. The Scottish Government is in there trying to help them. HMRC is also looking to extract maximum tax, which we completely support. Would that be a joined-up approach, or could it be more joined up?
I mean, I think that's an interesting question as to whether in those circumstances we could engage with the Scottish Government. I would sort of go back to the fact that HMRC, the commissioners of HMRC are, you know, appointed by Parliament for the collection and management of taxes. And, you know, ministers do express their views about concerns that a business might be going to go bust in a particular area of the country and ask us whether we can do anything about it. But we cannot be influenced by ministerial or political considerations. We do have to act in the best collection and management of taxes, but it doesn't mean we cannot communicate with, in the present case, the UK government or, you know, as the case may be, the Scottish Government about a particular taxpayer in difficulties and try and take into account any particular concerns. But, you know, we do have to take our own statutory duties to collect tax and our responsibility to Parliament and not to the ministers of the day seriously, whether those are UK or Scottish ministers.
Okay, thanks very much. Slightly different area. I mean, as I understand it, when we were considering who would operate stamp duty, well, the replacement for stamp duty land tax, i.e. land and building transaction tax, HMRC could have operated that system, but the government has decided to go ahead with Revenue Scotland. I understand that was partly on the basis of costs. I mean, can you give us any comment on that? I mean, do you feel that HMRC costs are, I mean, I hesitate to use the word competitive because you're not really competing with anybody, but are they at a pretty reasonable level?
I can't comment on that. I do not have any familiarity with the circumstances surrounding the decision to, you know, use Revenue Scotland rather than HMRC on that. You know, it's an unusual circumstance for us to collect a tax for another government. I would like to think that, you know, if we did, and I don't even know whether we did or not, you know, sort of quote to you on that, that we would have done so on, you know, good terms because we believe we're rather good and expert at collecting stamp duty land taxes. But Sarah, I don't feel you have to say anything, but if there is anything worth saying, then please.
Yeah, we gave the Scottish Government an estimate of what we thought it would cost. They made their own estimate of what they thought it would cost them to set up Revenue Scotland. On the basis of those figures and other considerations, I'm sure, they decided to go with Revenue Scotland. They were perfectly free to do so. So we will see how it all turns out.
Yes, we shall see, and I'm sure this committee will be looking at it. I suppose what that does raise in my mind is that if Revenue Scotland are cheaper on a land and building transaction tax, how can we be convinced that we're getting the best deal from HMRC on Scottish rate of income tax?
I think when he says cheaper, he means gives better value.
Can I think I'd make a sort of overarching point about that. I mean, first of all, two overarching points. First is that the Scottish rate of income tax is a Scottish rate of of income tax. Yes. As I said, it's not a separate tax. And the other is to remind the committee that all you're paying for is the marginal costs of collection, i.e. the additional costs over and above what it costs us to collect income tax generally. So in a sense, you're getting the core collection for free. You know, all of the infrastructure, all of the collection mechanisms that we have in place, all of the compliance work, you know, are paid for by HMRC and by the UK government. The only costs which the Scottish Government have to pay are the additional costs for dealing with Scottish taxpayers. But to the extent that we run a fraud campaign, or we have to just set up the IT systems to collect tax from Scottish employers, all of that is not paid for by the Scottish Government. So I would like to think that that's extremely good value for you, quite apart from being a function of how the tax works.
I think before the convener comes in, I mean, I would just comment that Scottish taxpayers are actually paying HMRC, so you have responsibility presumably to both. Okay. I mean, I suppose my final one on that point would be, I mean, if there was another new tax to be introduced, and the Scotland Act does provide for new taxes being introduced, would HMRC be open to operating that?
That's a hypothetical question. I'm sure we'd be happy to receive the invitation. Whether we'd respond would depend on what the tax was, what the other pressures were on us at the time, and generally what else was going on.
Okay, thanks so much.
Michael.
I think that Mr Troop has basically answered the question in response to John Mason's last one, but just for clarity, I'll ask it nonetheless. In the HMRC's submission on LBTT, in relation to the switch-off costs of IT and business changes, and in terms of publicity and guidance publication, you're going to say that costs will be refined as the work on the projects develop and will be shared with the Scottish Government. Is that the information that will be shared or the costs that will be shared?
The switch-off costs will be paid for by the Scottish Government. The information will definitely be shared.
Okay, that's fair enough. That clarifies it, thank you, sir.
Malcolm.
You've described the exercise you're carrying out to establish, who's a Scottish taxpayer, and you highlighted there could be problems if they've just got a PO box address and so on. But I mean, once you've done all that work, I mean, how many people is it going to be genuinely difficult to decide whether they're Scottish taxpayers or not? I mean, presumably if they've got an address in both countries or something. I mean, I just haven't got a sense of whether there will be a lot of people that it's actually quite contentious or whether it will be fairly clear-cut in the vast majority of cases.
I would hope it would be a relatively small number. Sarah, I don't know whether we have an idea at the moment.
I don't think we've got specific numbers, but the definition is designed to make it very straightforward for as many people as we can. Most people have one main home where they live, which they would consider to be their home, and that's where their base is, and that's what will determine their status as a Scottish taxpayer or not. I think we're expecting the sort of people where it will be difficult are people who are not permanently based in the UK in the first place, so they will be in the UK for a short period, and they will spend time in different parts of the UK during that period. There we will have to actually try and take account of the number of days in a year they spend either in Scotland or outside Scotland. But it's a new thing for us. This is the first time that within the UK your address has determined the amount of tax you pay potentially. So the work we need to do over the next few months is really to get to the bottom of exactly those questions. What are going to be the difficult cases, and what's the best way for us to try and identify them and deal with them and make things clear for them.
So now, just looking at it from the other side in terms of decisions that individual taxpayers will make, I mean, none of this will matter very much if there's no difference between the income tax rate, but well, let's assume, well, we don't know, it might go up, it might go down, it might stay the same, but I suppose if it went up, that would be when people would have an incentive to do something about their being a Scottish taxpayer. So I just wonder, I mean, what are the potential problems that we might face if the income tax rate in Scotland went up? I mean, you've already discussed it in corporations, so there might be an increase in people trying to incorporate. I mean, I'm just wondering what range of things would be a risk to Scotland, as it were, in that situation.
I mean, I think this is quite speculative. We discussed incorporation, and I briefly referred to location, and it seemed to me that those are the two most obvious choices which an individual has. And location, to the extent they have one place of residence, then they would have to move, and in a sense that would all be quite straightforward because people will be moving from Scotland to England and England to Scotland all the time, and our systems will have to cope with that. To the extent, and I would hazard it would be a pretty small number of people. There are individuals who have homes, let us say, in both London and Edinburgh, might be, for instance, in the financial services industry. They might switch the number of days that they spent in one or the other in order to, get the majority test in favour of England rather than Scotland if they felt it was disadvantageous. But I would have thought we're talking about a vanishingly small number of people who would actually do this, and a pretty small number who would, have an incentive or the opportunity to do that. But, we shall see.
So in terms of the cost, I mean, you implied that quite a lot of the 45 million was actually doing this kind of work. Is that right? I mean, is that what you're saying in terms of finding out who's a Scottish income taxpayer and so on? Is that actually...
Not necessarily dealing with hard cases, just working out where people's...
But currently, is that the majority of that money? Or I suppose I thought a lot of it would be just in terms of changing the IT systems, but it's a bit of both, presumably, is it?
No, I mean, of our estimate,
yeah.
of the 40 to 45 million, we think 10 million is IT change.
Right, okay.
So the 30 odd is
Right, okay.
non-IT, and that's not particularly the sort of clever stuff of trying to determine who,
Right.
in each case, whether somebody's a Scottish taxpayer or not. It's actually the bulk communication with them,
Right.
sending them letters and dealing with the responses and dealing with the inquiries and potential disputes. So it's that sort of mass market stuff that costs the money.
So, you know, we haven't worked out exactly what we're going to do, but let us say we write to everybody who we think is a Scottish taxpayer and say, we believe you are a Scottish taxpayer, and this is what will happen if you are. You know, please take, you know, whatever action, which may be inaction if you are, but will require something if you're not. That process of doing that will obviously involve quite a lot of just hard communication in terms of producing several million letters, but also will generate quite a lot of activity for those people who either we've got the wrong addresses for, or that they just happen to have a temporary address in Scotland, or they just don't like it, or they don't understand it, and they want to get in touch with us. And that, I think, is going to be the bulk of this cost, chasing that down until we have a data set of which we feel is sufficiently accurate of those people who genuinely are Scottish taxpayers.
I think another thing we're going to try and make available information on the internet, potentially a sort of test you can go through on the internet to try and help determine for yourself whether you come within the definition of a Scottish taxpayer. And potentially we'll be looking at whether we would communicate with people, allow them to register themselves digitally, because we're looking at digital solutions increasingly for a lot of our work. So that would affect the IT change that we want to do.
And I would emphasise that quite apart from our responsibilities to you to keep the costs as low as possible, it is in our interest to do this as efficiently and cheaply as possible, because we just have finite resources, not financial resources. We have finite people, we have finite systems, and we want to devote as little as possible those systems to any particular task. So, you know, we have both our responsibilities and an incentive to do all of this in the most efficient way, consistent with, you know, the level of accuracy which is needed.
So all that money, or less as you hope, will that will all be spent by 2016, and then you'll need some money just to keep doing that? Is that the smaller sum of money that you're...
4.2 includes the sort of the care and maintenance.
Maintaining the records.
So turning to the IT, apparently the Scottish Government has the opportunity to test the IT systems that you're developing, and obviously the efficient running of those systems is essential to, you know, reduce the risk of maladministration. So I just wondered how those assurance procedures will operate, and what assurance of their successful operation could be provided to the Scottish Government, or indeed
this is all set out, and you may be reading it at the moment in 2.1 and 2.2 of the Memorandum of Understanding. And as I said earlier on, we've got these sort of slightly additional provisions relating to IT and your opportunity to request an independent assessment of the costs. You said that you will have the opportunity to test the IT. I don't think that's quite right. I mean, we will test the IT, but you will be involved in the programme and the project board, and will be able to, you know, participate in the sense of oversee our testing and to reassure yourselves that it's giving the results and the functionality that you expect of it.
And I suppose just in terms of costs more generally, I mean, how will there be sufficient transparency and accountability around the expenditure that you're undertaking in relation to this?
This is something your colleagues in the Public Audit Committee were exceptionally interested in, I'm happy to say, and, you know, want you know, as much detail as we can possibly provide in as real time as we can provide of all the costs we're incurring. You know, I have to say that, you know, there are limits to, you know, the extent to which we can break down costs. We, you know, as I've said, are subject to the oversight of the National Audit Office, and as you will have read, next year's finance bill will contain a provision requiring the National Audit Office to be answerable to this Parliament, you know, in respect of its oversight of our work on the Scottish rate. But as with everything with our systems, there is a trade-off between our running our systems effectively and providing any given level of management information. What we want to do is to make sure that you and the auditors get sufficient information to reassure you on the costs, but not so much detail of information that actually it's impeding the sensible running of the tax system. And that is a dialogue which will continue both between us and the NAO and also between me, because I've undertaken to come back to the Public Audit Committee and that committee as this project develops.
I suppose a final question is just how the flow of income tax into the revenue. I mean, I suppose this is possibly more relevant for us than the UK government with its wider borrowing powers. But how much income tax, as it were, comes in within the financial year for which it's due, and how much comes in the following financial year, or possibly even later than that? But presumably not.
Gosh, that's a good one. I don't have that. Obviously, the PAYE all comes in within the financial year or within a few weeks at the end of the financial year. Self-assessment, we get in-year payments for half self-assessment and half in the following July. But obviously, as you imply, there's a fair amount of yield which is then collected through interventions after the end of the year. But what the split is, I don't know. But I suppose the numbers I can give you is that of the cash receipts we receive for taxes in total, about 97–98% of our actual cash receipts comes in without any intervention. And given that most tax payments are in year or soon after, that would imply, something like the same proportion should come in year. But as I say, that's an extrapolation from the total. But I don't have a breakdown for income tax.
I think under the arrangements for the Scottish rate, that cash flow effect doesn't feed through to the Scottish Government. The Scottish Government is able to draw down funds in year up to the total of the OBR forecast for the yield from the Scottish rate of income tax for that year. There then is a reconciliation 12 months after the end of the year, which will just then take account of the actual receipts as to whether they are higher or lower than the OBR forecast. But the money coming through to the Scottish Government isn't determined by the rate at which it comes through to us.
But is that just for the transitional period, or
no,
is that forever?
That
forever.
I believe is
not forever. Nothing's forever, but you know what I mean.
It is the intended permanent relationship.
Thanks.
Thank you. That's completed questions from committee, but I've got one or 2 points just to raise with you myself, just to finish off the session. First of all, our budget advisor has said about 84% of taxes collected in the financial year and about 16% in the subsequent year. I think the point that actually you just made there about the OBR, about the accuracy of forecasts, that's why there's been so much concern about forecasts, because clearly if they get their forecasts wrong, we then have to borrow money, up to £200 million in a year, or £500 million indeed, and we have to obviously pay interest on that at least 1.1%, so it could run to £7 million if their forecasting isn't accurate. And that's the point I want to go on to, because we talked a wee bit about forecasting in terms of Jean's questions, but the OBR's paper produced in March 2012, Forecasting of Scottish Taxes, said, and I quote, under 2.4, to consider the appropriate methodology for forecasting Scottish taxes, we have worked closely with analysts at HM Revenue and Customs. We have also discussed the approach with officials from HM Treasury and the Scottish Government. The forecasts will be produced by analysts at HMRC. So you will be providing those reports and those forecasts. Will that also extend to receipts for landfill tax and for land buildings and transaction tax, as well as SRIT?
So I would assume not, if we're not responsible for those taxes.
Revenue Scotland will deal with that, just for clarification.
So the reason why we do the forecast now is because we have the data. Yeah. Obviously, in future, for the land and buildings transaction tax and Scottish landfill tax, Revenue Scotland will have the data. So there would be no point in us trying to be involved in that forecast. Okay, thank you for that point of clarification. That point I was going to make was just a wee bit, just to move on from what Malcolm was asking about in terms of the geography of taxpayers. If there's a dispute as to where someone actually has their residence, what is the default position? Is the default position that they will be, if there's
if you can't really decide whether they are Scottish or rest of the UK residents, will the default position be that they are considered to be UK taxpayers?
They have to be UK taxpayers to get into this.
You know what I mean? Are UK
Yes, sorry,
taxpayers?
non-Scottish ones. Well, I can't remember whether we've circulated a rather useful flow chart which sort of takes you through, you know, are you a Scottish taxpayer or not? But I'd be happy to put that round.
I don't think so, but it might be helpful.
I use it as a useful crib. Once you've identified an individual, if they've got one place of residence and that's in Scotland, then that's it. If they've got a place of main residence, and that's an established test we have under UK tax law at the moment, so if there's any dispute about that, that would go to an appeal with the taxpayer. Then if the main place of residence is in Scotland, then they are Scottish taxpayers. If you can't identify a main place of residence, for instance, because they're non-UK most of the time, but they're still UK tax resident, or live out of hotels, they might be, you know, workers who are spending time here, you simply do a day count and you determine where in the UK you've spent most days. Now, we do have to do that at the moment for non-residents who are here to determine whether they're resident, and, you know, in some cases we literally ask for hotel receipts and, you know, evidence that they have come and left the country on particular days, and we add them up and count them. So in these marginal cases, we would do the same. I think in this it's quite difficult to see where the dispute would be, apart from the question of where your main residence is. And that, as I say, is something which UK tax law already provides for a number of tests, and where if you do dispute with HMRC, you just go through the normal tribunal process of taking your case and putting your facts and accepting a decision. But you know, as we've said, we think there are going to be quite a small number of people where we're even going to get into worrying about this flowchart, let alone having a dispute with them.
And it would only be, as Malcolm said, if the rate was actually different, you know, if it was higher or lower, and well, significantly so, one would expect.
Yeah, so although one can't rule out the possibility there are individuals who, notwithstanding there's no change in rate, are particularly determined to be or not be Scottish taxpayers for other reasons.
Indeed. Indeed. Well, thank you very much. Actually, that's been very helpful this morning, and safe home. Thank you very much. That actually completes our, the public session. So we'll now close the public part of this meeting. I'll just call a wee 5-minute break to give members an actual break and allow the official report in the public to leave.